Turning back to Britain as the country mourns the murder of the British Parliament member Joe Cox, who was attacked yesterday. Cox's murder has stopped all political campaigning on both sides ahead of next week's vote. This adding a new layer of uncertainty. Joining us right now is the CEO of Fairfax Global Markets, Paul Dietrich, joining us right here. Paul, good to see you.
Thank you.
Thanks so much for joining us. Do you expect a big impact from the vote next week, and if the UK leaves the EU?
There will be a political impact. There will be a short-term, well, we're already seeing short-term volatility in the stock markets because the stock markets hate instability. But if you look at what's actually happening, if they leave the European Union, they have 2 years to renegotiate all of their agreements. So for the next 2 years, nothing is going to happen. Nothing is going to change.
Yeah, because that was the worry, that they would have to redo trade deals, new regulations, because right now, obviously, the UK is under the EU rulemaking.
Right, but right now, the UK represents about 25% of trade for the 28 countries in the European Union. Now, those countries are crazy if they're not going to be running like crazy to sign new agreements with either their first or second, after Germany, largest trading partner. I mean, you know, the scare tactics that the politicians have used in this campaign have just been outrageous. There was the most interesting poll that's been done is that 17% of the people yesterday, when the poll came out, only 17% believed the UK government, meaning Prime Minister David Cameron, Osborne, and the head of the Bank of England, and 70% think that they are lying. And so I think this is going to have the major impact, because if they do vote to leave the European Union, David Cameron is toast.
Well, I would only point out that the decision not to join the euro was a good one.
Yeah, so that's the big problem with the EU, frankly.
They've got the British pound, and it worked.
You've got Greece and Germany using the same currency, which makes no sense. It takes away all the levers that countries have.
Right. So I'm not questioning this move to move, because it worked.
But I would ask Paul, so the EU obviously doesn't want Britain to leave, and they certainly don't want others to follow. So wouldn't they have to do something to sort of punish Britain, to say, hey, anybody else who tries to do this is going to end up with this bad result, not this great result, which is, hey, we're going to renegotiate all our deals and everything will be just fine?
Yeah, that is the argument. The reality is that if you're a politician in any of those 28 countries, you're going to be listening to the businesses in that country. And the businesses are not going to give up 25% of their thing just so that you can have some sort of symbolic victory. It's one of those stupid arguments that they have. And you know, the reason that the people are supporting leaving the European Union, part of it, and we see this here in the United States, is that, you know, they are just sick and tired of Brussels bureaucrats micromanaging their businesses with just massive regulations.
And Angela Merkel. They don't want Angela Merkel running their lives.
Exactly. And that's one of the things. The other thing is immigration. That's the biggest issue in this thing. They do not trust European Union bureaucrats to vet all the millions of Middle Easterners who are coming into the country, and they don't even think that the Brussels bureaucrats care about vetting.
Bring it back to the U.S. for a second, because earnings are on tap as well. Oracle had some strength last night. Is that going to help markets today? And what would you expect for the rest of the year?
I think it will. You know, I think we have to get rid of the iconography of bulls and bears, and we have to start thinking of an elephant economy. I mean, we are in a slow, steady, plodding economy. And in the long run, earnings drive the market. And what we've seen for the last 4 or 5 quarters is, if you take out energy, relatively flat to slightly down earnings and revenues. Everybody believes that in the second half of this year, earnings are going to go up, revenues are going to go up, and we're going to have positive earnings, partially because the energy industry is now over a year of year-over-year declines, so they're going to have upswings. And so I'm cautiously optimistic. A lot of people are talking about 6% growth in the market this year.
6% in the S&P 500?
Yes.
Well, it's certainly, as you've had the 10-year yield fall to what is almost a 4-year low.
1.5% right now.
Bonds have become, or government bonds here have become a lot less attractive, and making certainly dividend-paying stocks a little bit more attractive, assuming that Hillary Clinton doesn't start messing with tax rates. maybe.
Well, that's one of her proposals.
Right, exactly. And it goes to the, I mean, can you get a rally heading into November? With the, you want to talk about the big question mark. The big question mark is what's regulation and what is tax policy going to look like come January?
That's absolutely the question. And we don't know until the election happens.
Yes, that's true. But we kind of know that at least the Democrats have basically said they're going to keep the Obama administration going for another 4 years. And I think that's going to be devastating for job growth because of the regulations. Every businessman I talk to, small business, big business, the cost to their businesses of these crazy regulations in Washington is just killing them, and they're just not, they can't hire people.
And that was the Republican platform, Lee Carter: roll back regulations and lower taxes.
It's what people want to hear, because ultimately they want to hear about jobs, they want to hear about growth, they want to hear about the economy, and it's what it's keeping people who are questioning maybe the candidate, that's keeping them saying, you know what, that's what we want, we don't want the other side.
Right. So do you think the market rallies if Trump gets in, or rallies if Clinton gets in?
I think the market rallies if Trump gets in.
15% corporate tax rate is.
Yeah. And I think people, I think a lot of people will be disappointed when you look at the polls. People respect, and especially Democrats respect and like President Obama. But when you ask Democrats the question, do you think you're on the right path in the country, the direction of the country is going, 70% say no.
Right.
Yeah. And for the first time, people are saying that, I mean, it's in the Obama administration, it is when things turn for people to say, I don't believe that my children are going to have a better life than I do. And that is a devastating measure.
This is a change election. And I mean, Hillary will be the first woman president if she gets in. That is a change. But I think the change that the American public is saying, they want something really different from what we've had over the last 8 years.
They want Trump to shake it up, apparently. Paul, thank you. Good to see you.
Thank you, Maria.
Paul Dietrich there. Still to come from